Alrighty, welcome back to Weenie Trades. The Weenie Wednesday streak continues yet again. It was a crazy day in the market. SPY gapped up massively and just had a huge run all day. So it was a really good day. It was a super fun day. Oh my gosh. Just every single trade we had just popped off. And so it was a monster day swing trading, and it was a kind of a weenie day trading plus $31, but on the swing trading plus $924. It was a little bit over $1,000 profit between all accounts, but that doesn't matter as much as the entries and exits. So in this video, I'm going to be talking about how I risk very little or sometimes nothing to get paid big on big push days like today. When the SPY is up 1.38%, that's a big day for the market, and a lot of stocks are really probably popping off. And there's a little bit of short squeezes, FOMO buying, whatever it may be. But let's get into the swing trade. So our first swing trade was on FSLY, and FSLY, you remember yesterday we ghetto spreaded into the swing trade. So that's how we were able to make the trade basically free. But FSLY, a little extra $80 today in profit. We peeled some shares off in the 99 level, and then we stopped out of the rest right underneath 95.85. FSLY really good, and we still have two little ghetto spreads that we legged into, risking $3 to potentially make 50 times 2, so risking $6 to potentially make an extra $100. So that's FSLY, really good swing trade. Our next swing trade was Facebook, and Facebook, same thing. We legged into the ghetto spreads, we closed bullishly. And I went ahead and took off one contract right in the morning, one contract off in this lower zone, one contract off at 267, and we are still holding the butterfly. So the butterfly, we're buying the 260 call, selling the 262.50 call, and buying the 265 call. That's basically a free trade. So if Facebook can come down to 262.50 by the end of the week, we can still make about $500 profit, maybe actually more, about $300 profit, but $0 risked since we made that trade free by legging into it. So that was Facebook. Our next trade was Amazon, and Amazon yesterday, it was screaming a buy. I mean, we had the pull down, move up, sideways consolidation. We went ahead and went long Amazon 31.29, and then added at 31.32. We did a call debit spread. We bought the 31.65 call and then sold the 31.70 call. Those cost $120. So those cost $120. Today we were closing them out for $400. So $120 into $400. Normally I'd trail Amazon, but it was up so much and I figured I might as well take the profits. The risk to reward screams so, but really should have stuck with them. So Amazon's wishing, I wish I would have stuck with that one a little bit longer, but $120 into $400. That was a nice, really crazy good trade. And Disney popped up. We had a nice rally into the close. That's bullish. I went ahead and added a call spread on Disney. And today we got the gap up on sympathy of Netflix. So Netflix, if you know, NFLX, had a nice, really good monstrous earnings. They're only pricing in a 6% move. So if Amazon starts, or if Netflix starts going past 6%, the market makers have to start hedging, so they have to buy because it's moving outside the expected move. Market makers, hedge funds, people, you name it. So Netflix, really good move up, and Disney got the sympathy play from that. So we added the call spreads. Boom, we got the nice gap up on Disney. A little extra $14 on shares that we had to stop out of because Disney faded the rest of the day, but nice early morning push, an extra $226 on Disney. Just every single stock that we had just really went crazy and really went off. Uber had a nice strong bullish close. We got the gap up, rip up. We even day traded it a little bit today. We bought Uber just over 57.40, trailed it up, tagged out at about 57.70. So small little revenue trade, barely anything, plus $11, basically a break-even trade, but we didn't have to be in it for any of the red candles. So that was Uber today, really good move. And then Zoom, I had a lot of positive deltas, meaning I would make a lot of money if the market was going up. So I figured, I need a little bit of protection. What better than Zoom? I don't really like Zoom as a company. They're a good company, but I don't think they have a very wide moat. And I think it's one of my go-to stocks to short. And Zoom, just quick flush on the day. And Zoom, we bought a put spread, bought the 380 put, sold the 377.50 put. And that trade was $50. And today we closed it out for $110. So nice, good trade on Zoom, over 100%. And then on the day trading, so that concludes the swing trading. In terms of the day trading, let's talk about Microsoft, MSFT. Really good move, bull move all day. Nice, good rally. I missed the first buy point over 218, but later in the day, we got this nice, good push up, pull back, and right over 220.70, I went ahead and went long Microsoft. And boom, right there, Get this nice good push up, and right as we get a little bit extended into 223, I went ahead and ghetto spreaded Microsoft, doing the exact same thing I do over and over again. So we bought the 222.50 call, paid $122 for that. Right now it's worth $288. That's $166 profit. But since I wanted to remove some of the risk, I sold the 225 call for $75 credit. That dampens the P&L a little bit, but still P&L open of about $98, and we were able to grab 10 shares, so nice good little bit of equity exposure. But Microsoft looking to continue, potentially break out ahead of earnings, and then we'll start to peel profits in front of earnings. So that was Microsoft, really good trade, even on the day trading side of things, plus $18. I think I got tagged out just a little bit too early. So day trading, just wanted to be extremely conservative. And then our worst trade of the day is on Workhorse, WKHS. Earlier in the morning, they got a price target upgrade of $29 a share. And we got the rip up, pull down. And as we started to come up, I went ahead and went long Workhorse just over 24.10. Boom, we got this nice good push up. I add over 24.40. And then this is where I really screwed up. We got the pullback, hammer candle, and right over here I added again. This at one point was a green candle, but then it turned into a red candle. So at one point the buyers took control, and then the sellers slammed it right back down. So I went ahead and stopped out of one contract just underneath 24.11, another contract just underneath 24. I stopped out on my last contract underneath the low of the day, 23.68. So Workhorse, an annoying expense trade of minus $52. We talk about the good and the bad. Of course, if you want to check out all the other rest of the account, there were some bad swings. Beyond was down a little bit, but net overall, really good green day. Let's get ready for Thursday and Friday. Definitely in a lot of cash with the market being so high, but high can always become higher. So just be careful. Don't short a stock just because it's up a lot. You need to have a plan. You need to have an entry, stop, target. Maybe that could be the high. Maybe it isn't the high. Maybe we gap up. Maybe we gap down. Maybe we stay the same. Generally, if it's ambiguous, I like to stay in cash. So that was the trading day today. Super fun, super thankful, risking a little bit to make a lot. And that's why we have small green days, small red days, medium green days, medium red days. And we allow ourselves to have big green days, but we never allow ourselves to have big red days here at Weenie Trades. Alrighty, hopefully you learned something new. Smash the like button, comment, subscribe, share with your friends if they're learning to trade or even want to touch the market. There's a lot of stuff that goes into all of this, and you don't want to be jumping in blindly into trades. So, thanks for tuning in. See ya.